Hello, yes, now welcome to my channel. Make sure that you subscribe, you like, and you comment. Okay, today we are going to learn a strategy which is called smart money concept. It is called the smart money concept or SMC. This is a advanced strategy. Now, this strategy was developed, in the market. Uh, there are two mainly participants who are trading in a financial market. We have those who we call a retail trade, and we have those who we call uh, bankers, hedge funds, or institutions are trading. So these bankers, banks, and hedge funds are the one who move the market because they have large amount of capital to push the market. So this kind of people or big institution and the banks are the way they are trading. It is opposite to retail traders. So smart money concept was developed uh, aiming at helping this retail trade to trade like those banks or hedge funds, those people who have large capital. So in order to trade like banks or to trade like hedge funds, make sure that you understand this concept of smart money concept. Now, in smart money concept, the first thing that you have to learn in the market is structure. And the second thing that you have to learn, you have to know the brick of market structure. And the C, you have to understand what we call change of character. And the E, you have to know how to mark those zones, demand zone and supply zones. And the F, it is very important also to understand order block and breaker block. And the G, it is very important to understand about imbalance or insufficiency in the market. And the H, it is very important also to understand about liquidity, concept of liquidity. And I, it is very important to understand about entry. So today we are going to learn about market structure. Market structure. So any trader who want to trade using this smart money concept must first understand the market structure. He or she should understand what does market structure mean. Because when we venture into the market or when we enter into the market has got structure. You cannot trade in the market without understanding this structure. Okay, now let us see market structure. What does it mean when we are talking about market structure? Okay, in the market structure, we have what we call uptrend, that is A. We have uptrend, and also we have downtrend, which is bearish order flow, and uptrend, that is bullish order flow. Now I hope you understand what I'm talking about here. And the C, And here C, we have ranging market. We have ranging order flow. Yeah, we have ranging order flow. Or swing. Sometimes you can call swing or can call ranging order flow. No, these are the three kind of market structure that you should understand. So in a market structure, there should be participant of the market. For it to be a market, there should be buyers, there should be sellers, and there should be also a product which is being sold. So in a market structure, we have three types of market structure. We have uptrend or bullish order flow, and we have downtrend or bearish order flow, and also we have ranging order flow, or sometimes we have swing order flow. These are the three market structure. Now let us learn how these look like. Now we are going to start with uptrend. How uptrend look like? When you see the market moves like this, no, yeah. Let me find a good tool to draw. Yeah, here. Yeah, this one. When you see the market is moving in this way, you know, when you see the market is moving this way, in this way, in this way. So this we call, this is an uptrend. This is an uptrend. This is an uptrend. When you see the market is moving this way, so this is an uptrend. And on these, there should be higher highs, and here this is higher low. This is higher low. You see, the market should create higher highs and the market also should create higher low. This is higher low. This is higher low. This is higher high. Oh no, this is higher high. And also this is higher low. This is higher low. But also this is higher high. And this is higher low. So when you see the market is move like this way, now this is we call is an uptrend or is a bullish order flow. It means buyers have taken a place more than sellers. So you see the market is trending up, the market is going up, and it's creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is the example. When you see the market is moving in this way now, you got to understand that is this is a down, this is a downtrend. This is an uptrend, not a downtrend, sorry. So as I've said that in the market there are three structures. Now we have begun with this first structure, that is uptrend. Now let us go and see to the real market chart. Yes. Now when we see here Euro USD was in a uptrend, as we can see. So we see this is a higher high and this is higher low. This is higher high, this is higher low. This is higher high, this is higher low. This is higher high, this is higher low. So here the market was trending up. So this structure, we call this is an uptrend structure. Now let us see another structure. Another market structure, downtrend. Now we're going to see downtrend because our bearish order flow, this one, downtrend, how it looked like. Now let us draw. When you see the market is moving this way, moving this way, or let me draw again. Here you see the market is moving this way, breaking structure, market is breaking. Yeah, market is moving this way. In this way. So when you see the market is moving this way, this is a downtrend. This is a downtrend. Because why it is a downtrend? Because it creates a series of low lows here. This is low, and this is higher low, low high. This is low high. This is low, but also this is low high. Let us see. Also, this is low, and this is low high. That is low high. This is low, and this is low high. So when you see the market is moving this way, now you get to understand that this is downtrend. This is the second market structure that you should know. This is downtrend. When you see the market is moving this way, now you get to know that this is downtrend. You gotta know that this is down, this is downtrend. I hope you get the point there. Now let us see the last market structure. The last market structure. Now, before going to the last market structure, let us see in a lily chart. In a lily chart. Now, in a lily chart, what we see here, the market now was in a on a series of down, or going in a downtrend from there to there. The market was moving down, as you can see here. Now here you see a series of, this is higher low, this is low low here. This is higher low, and this is low low. This here is higher low, and the market also is creating low low here. And this is higher low. Now the market is about to create another low low here. So when you see a structure like this one, so this is downtrend. Now you got to know how to mark these higher highs and higher low and low low. This is higher low, so you come here and you mark these. You know, this is higher low, and you mark these. I'm showing example. So this is low low, and we have another higher low here. We have another higher low here. Let me mark here. What long this? This is higher low, and we have also a low low here. The market is creating a series, and also we have another higher low here. We have another higher low here, and also we have low low here. We have low low here, and we have the last higher low with this one. This was higher low, and we have the low low here. The market is about to create another low low here down. So I hope you understand what I mean. I hope you understand what I mean. Now, if you want to join in my mentorship program, make sure that I'll put the link down and you join my Telegram channel. Yeah. So this is how downtrend look. I hope you understand. Now remember that we are in the first section, we are learning about market structure. And we have said we have 3 types of market structure. And the last market structure is ranging, or sometimes you can write swing order flow, or sometimes swing order flow. Now when the market swings, now what we expect to see in the chart, we are expecting to see this kind of structure. When the market is swinging, you know, when the market is swinging, we can see this kind of structure. You know, structure may not clear. Sometime I want to draw a structure that people can understand. See, the market is moving this way, it's creating internal structure and moving this way. Yeah, so this kind of market structure is called the swing market structure. Okay, now the market you see is creating something like support and resistance. Those people who understand the concept of support and resistance, here is creating high. Now when the market is in a swing structure, it means that buyers and the sellers are in equilibrium. It means that buyers and the sellers are got the same momentum. So the market push here, this is high, it creates highs, and also the market creates lows here down. No, lows, not low. Okay, the market also creates highs here, and also the market creates low, and also you see the market create high, and also the market create low. So here you see the market is moving in this way. It means that those who understand the concept in price action, who understand the concept of support and resistance, though this will be like a support area, and also this will be a resistance area. So the market move in that way. It is very simple to recognize this kind of market, these three types of market structure. Yeah, so if somebody asks you now what is the market structure, you can understand and you can draw line and you can illustrate this kind of theory of market structure. Now let us see in a chart where we find our ranging. No, where, yes, this area you can see. In this area, market was creating highs and creating lows, creating highs, creating here lows, creating highs, creating lows, creating highs, creating lows. So this kind of market structure, it was ranging from this zone. The market was ranging here, as you can see here. And you can see here, draw, again you understand what I mean here. The market is ranging there. Or the market is ranging. So it creates a series of highs here and lows, highs, lows, highs, lows, highs and lows. So when you trade smart money, it is very, 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 very crucial. It is very pivotal. It is very important to understand this kind of structure, this kind of market structure. Now I hope somebody has got my point. The market structure, we have three types of market structure: uptrend or bullish order flow, we have downtrend or bearish order flow, and we have swing or ranging market structure or order flow. So first of all, if you are trading smart money, it is very, very, very crucial and very important to understand this kind of market structure. Thank you very much. Make sure that you subscribe, make sure that you like, make sure that you comment, and I will put my Telegram link below, and you can learn. Yeah, thank you very much for listening. And another lesson will be, we're going to learn about break of market structure. Yes, so make sure that you subscribe so that you can get and you click notification bell, so whenever I put my my video, you will be the one to see it. So make sure that you do that. Thank you very much for listening.